Global financial assets of private households rose by 7.6% in 2023. That's despite the higher interest rate environment and is a vast improvement on the 3.5% decline recorded in 2022. So how did the middle class and lower income households fare in the period? Well, to give us an overview of this and other major findings from their report, I'm joined by Dr Arne Holzhausen. He's the head of Insurance, Wealth and ESG Research at Allianz Commercial. Thank you so much, sir, for joining us. So this is quite a positive thing that private households' wealth increased last year. Just tell us about the main drivers behind that.
Yeah, thank you. And thank you for having me here. Yeah, last year we were also quite surprised because, as you mentioned already, central banks tightened monetary policy, hiked several times interest rates. But not only the economic environment was quite challenging, we also have seen political challenges, to put it mildly, a lot of conflicts, even two big wars in the Middle East and in Ukraine. And normally, if you have such an environment, political uncertainty, rising interest rates, you would expect that economies go into recession or at least do not grow much, that markets correct. But last year, nothing of that happened. Quite the contrary. Many economies remained quite resilient, first and foremost the US economy, and market boomed. Even here in Germany, where we had a recession, market increased by 20% last year. And this was very welcome news for the households worldwide, for the savers worldwide, because they were able, as you said, to increase by 7.6%. And this is quite a healthy clip. This was driven mainly by securities, by shares, by stock markets, but also by bonds that also performed quite well. And this is to our delight, also with insurance and pension did quite a strong recovery last year, increasing by more than 6%. This was the main drivers for this development last year.
So what about liabilities? I mean, it's great that people managed to accrue some assets, but what about liabilities in terms of debt? What did you see in that sense?
Yeah, this was more like an expected development because normally you can see if interest rates go up, loans get more expensive, and so the demand for loans reduces, goes down. And this was exactly what happened last year. Globally, we have seen only an increase of 4% of liabilities. This was one of the lowest increases since the global financial crisis. And in some markets, even for example in Western Europe, there was below 1%, basically a standstill. And this is also welcome news because we can see that in most places, in most regions, the debt ratio has come down. The debt ratio, this is the liabilities in percentage of income and percentage of GDP, and this describes to you indebtedness and also their ability to pay for your debts. And if this comes down, then debt becomes more sustainable, and this is the development we see in most markets. There are some exceptions, China, for example, many Asian markets, but it's similar also in South Africa, for example, where we have seen that in the past. And this is also something special to South Africa, debt, the increase in liabilities was slower than the increase in financial assets. In many emerging markets, as you mentioned, liabilities increase faster, grow faster than financial assets. And this is a situation, this is in some markets, not least in China, of a big concern.
So interestingly, you talked about bank deposits, that in 2023 they were markedly down. And of course, you do talk about the fact that bank deposits were quite big during the COVID years, let's say, 2020 and 2021. And you saw that quite diminished in 2023. What does that speak to? Does that mean people were having to spend more of their money because of the high inflation situation? What did you read into that?
This can be the case, but the main driver was more that investors, savers realized that bank deposits are with low returns, and they shifted their money into higher return assets, in particular into shares, but also in bonds. And this can be seen as a movement of money around, going from one financial assets to the other assets. For example, look at the Americans, the North American households. They withdraw deposits of up to more than 600 billion euros last year. This is quite a lot, but invested at the same time more than 1,000 billion euros into bond markets. So it's not so much that most people, the average people we talk about, needed this money to consume, to continue to consume, but it was mostly a shift in assets, a shift in reallocation within portfolios.
Yeah. So let's get real here about the numbers. We talk about an increase in assets. Who is increasing those assets? Is it, the top 10, 20% of the global rich? Or, I mean, what is happening? What's the state of the middle income earner and the lower income earner? I mean, we heard stories in Europe about people having to go to food banks to go and get food because they couldn't afford to go to the shops to buy food.
Yes, I mean, wealth distribution is a big concern. This is across all markets. It's probably less pronounced in advanced markets where we have social security systems, but still, if you look at the numbers, in some markets, and South Africa is one of these, the top 10% of the population, the richest 10% of the population have more than 80% of all assets. So that is really a big number. And on the other hand, if you look at the bottom 50, then sometimes only 2, 3, 4% is left. So there is really an issue here in most markets and most economies of the unequal distribution of wealth. That's for sure.
Indeed. Well, Arne, we're going to leave it there, but thank you so much for giving us some of your insights from that report. That was Dr. Arne Holzhausen. He's head of insurance, wealth and ESG research at Allianz Commercial.